What's up, friends? This is Manoj Vakrani. I welcome you all on behalf of the Edupedia world. So, guys, by now we have already covered three of the most important chapters of CE Final SFM: the basics relating to SFM, the chapter relating to bond valuation, and mutual funds. And this is probably the fourth chapter which we'll be covering in the forthcoming presentations, and that will relate to the capital markets. So, in this chapter, you'll get the entire clarity as to what's going in your books as well as what's going out in the markets. So, that will help you enhance your theoretical base as well as your practical knowledge, which is revolving around the stock markets, debt markets, and various other financial instruments. So I guess you must have been doing very well in your day-to-day lives, and certainly you are regularly revising the topics time and again. Perfect, guys. I expect that kind of attitude from your end. So we'll start and mark the beginning of this presentation with the topic relating to the difference between a primary and a secondary market. So this kind of question has already been asked various times in various phases of your life, since you were at school as well. At that moment of time also, you must have heard about this question. And I guess probably you will be hearing about this question very long in your lives as well, because once you start entering into the financial market, the day in, day out IPOs are coming on in the current scenarios, current market. And certainly IPOs will always come for that matter. So the case of difference between a primary market and a secondary market will always be available at your end. So let's study about what's primary and a secondary market. So guys, in primary market, the securities are basically offered to public for subscription for the purpose of raising the capital or funds. You must have heard about the term IPO. I'll be covering that term in a holistic manner in this presentation of mine in the forthcoming slides. So therein you'll get to know about what's an IPO is, what does a particular IPO means, and how it is related to the primary and a secondary market. So IPO issue, the initial public offer, whenever a company starts or thinks about listing its security, one has to release and issue its IPO in the market. So that is where the primary market comes into the picture. The issue of securities when one first for the time are listed in the market, then they are entered into the horizon of a primary market. That is the first time in which securities are offered to public for subscription for the purpose, sole purpose basically, for raising their capital or funds. Whereas in the case of secondary market, it is an equity trading venue in which the already existing or pre-issued securities are traded among the investors. So let's suppose pretty recently, like I guess a year back, there was an issue which was released for Indigo. Indigo is an airlines. So that has released their issue. So at the time when it was first issued in the market with initial public offer, it started out with primary market. They got the public offer just for the sake of subscription so that they can raise their required and stipulated capital. And once the same is being offered for the first time in the primary market, now that share is regularly traded in the market in secondary market basically. So if in case you want to purchase the securities, you can simply go for the first option as well, that is initial IPO offer. Or if let's say you were not able to extract out the opportunity which was once offered to you in the primary market, you can surely again go for the purchase of those securities relating to the company Indigo in the secondary market as well. So the shares are being traded day in, day out over there. So you can simply open up your demat account, your trading account for that matter, with any of the brokerage, full-time brokerage firms or discount brokers, and you can start purchasing those securities in secondary market as well. So the basic difference between a primary market and secondary market lies at the timing. So when the issue is being made for the purpose of raising the capital for the first time, it enters into primary market. After being listed over there, the same begins its trading in the secondary market. An investor basically has the option to purchase or sell those securities at any time whenever they want to. Secondary market could either be an auction or a dealer market for that matter. So that's an advantage. You can either go for auction method as well as the dealer method, which is being available in the market day in day out. While the stock exchange is a part of auction market, the over-the-counter term which was being heard during our last IPCC as well. So over-the-counter is a part of dealer market basically. So that's a bit of difference between the two. OTC market is the one on which one has to be there across the corners and the counters for that matter. So there are two parties. One goes for one option, another one goes for another option. So they have to be across the counters for that matter, involving the direct exchange of securities. Whereas in stock exchange, you can simply go as a normal trader, normal investor, and you can easily purchase down your securities. And whenever you wish to, you can sell them easily. So guys, that was a brief thing about primary and a secondary market. You must have heard about it many a times. Since it's been included in the CA final examination, I don't want to leave anything for that matter, just to ensure that you guys don't face any kind of problem. So let's move to our next topic, and that is investment banks. This a theoretical question, though I won't say it a theoretical question, but as far as the books are concerned, that is a theory question which has been asked in CA final May 10 examination. So what's an investment bank? Let's read about that and learn something about that as well. So investment banks are the investment banking companies which actually help companies and governments to raise their money by issuing and selling those securities in the capital markets. That can be both equity as well as debt market, as well as providing the advice on transactions such as mergers and acquisitions. So basically, guys, investment banks help the corporations, the companies, the government to raise the money by issue of securities in the capital markets. That can be the issue of share capital, that can be the issue of some long-term debts, that can be the issue of bond as well. So they help these organizations to raise their money for the first time in the primary market. As well as there have been many instances where it was noted that usually big bulge or mergers and acquisitions are taking place in the market. So there the role of investment banks comes into the picture. They also provide the lucrative and the specific advices on the transactions to help mergers and acquisitions flow in easily. So that's their role, and for that matter, they charge heavy pay packet checks for that matter. So, guys, it's a growing economy, and certainly mergers and acquisitions are regularly happening out. So the involvement of investment banks is extremely important as far as the market are concerned, and they do provide such kind of transaction-based advices as well. And not just this, guys. Investment banks also offer strategic advisory services for mergers, acquisitions, divestiture, and other financial services for clients such as trading for derivatives, fixed income, foreign exchange, commodity, and equity securities. So that's their kind of portfolio which they provide. So they also provide those kind of strategic advisory services for many different instruments as well as different processes that may include divestiture, other financial services like trading, fixed income, forex, commodity, and so on. So guys, an investment bank is split into the so-called three layers. So that's how an investment bank usually works. Their entire process is being divided into three parts, and that is front office, middle office, back office. We as CAs mostly start our career, if we have that kind of inclination of starting our career in an investment bank, we usually fit into the position of middle office, neither in front office nor in back office, unless some of us aspires to become MBAs along with CAs from top tier colleges, top tier MBA colleges. Then there is a lucrative chance for all of us to get into the front office dealings where hardcore investment banking and investment management dealings are being done on the front end. So there we get an opportunity to take care of our investment banks. So guys, we'll be dealing about all these three layers, front office, middle office, and back office, so that you never know, maybe you get excited about all these things and start aspiring for a career into financial domain rather than going for the regular bread and butter which is involved for CA candidates for taxation and auditing. So there are lucrative chances, there are enormous kind of opportunities that are available in investment banks as well. However, one has to have that kind of appropriate knowledge in order to secure a seat at a very pleasant place. So let's discuss about the next thing, which are the top 10 investment banks in the world. I guess that will excite you for a better mood. So, guys, these are some of the famous and reputed names which are involved in the market. Goldman Sachs is one of them. JP Morgan Chase, Barclays, Deutsche Bank, Credit Suisse, UBS. UBS is United Bank of Switzerland. In the year 1998, it was Union Bank of Switzerland and another entity which formed a United Bank of Switzerland, and they are providing investment banking services along with that. Citigroup is one of them. Morgan Stanley is another one. Bank of America, Merrill Lynch, and Wells Fargo. These are the top 10 investment banks in the world. So I guess the day must not be far when you guys could have been like thinking about joining any of these big forces, and certainly you'll be able to make India as well as CA colleagues proud for them. So I'm sure you'll be able to make us cherish about those factors together. Perfect, guys. So now let's understand the structure of an investment bank. As just discussed with you, it is divided into three layers: front office, middle office, and back office. That is the structure for it. So now let's understand in a better way, taking all these things one by one. So in case of front office, we have three different dimensions. That is investment banking division, investment management division, and merchant banking. So guys, the front office basically helps the investors to raise the capital markets and advising on mergers and acquisition. So it is the front office which actually helps the customer raise funds in the capital market. And usually they are the ones who provide advices on mergers and acquisition. That is a hardcore domain practice of investment banking. Front office basically does take care of those things. So they have divided their structure into three parts: investment banking division, investment management, and merchant banking. So investment banking division is again divided into two parts. One is industry coverage, another one is product coverage groups. So industry coverage groups focus on the specific industry such as healthcare, industrials, technology, and let's say they maintain with those kind of corporations within the industry to bring in the business for the bank. In case of product coverage groups, they focus on financial products such as mergers and acquisitions, leverage finance, equity, and high grade debt. So that's how investment banking division is basically divided into two aspects. One is investment and another one is industry coverage, and the second one is product coverage. So now let's understand what investment management division does. So this division is also divided into two different layers. One goes with private wealth management and another one goes with private client services. It is also divided into these two layers. So the one private wealth management basically deals with institutional investors that are big giants, big corporations. So that is their prerogative. And in case of private client services, they take care of the funds of high net worth individuals. So there are people in our India who are classified into like lower income class groups, middle income class groups, then there are high income class groups, and there are extremely high. Those are the high net worth individuals. So basically, private client services provides those kind of investment management services to those high net worth individuals. So that's how investment management division is divided. So investment banking, I'll reiterate, investment banking is being divided into two parts. That is one for providing services only on industry coverage, and another one for providing like investment banking services only for product coverage groups. And in case of management division, then again it's being divided into two parts. One is private wealth management, another one is private client services. Private wealth management goes with institutional investors, and private client services basically goes with those high net individuals. So what's their basically need in the process of market making? So guys, here basically traders will buy and sell the financial products with the goal of making incremental amount of money on each trade they do on the behalf of their investors, their clients. So that's how they'll be dealing with these kind of securities. Plus, the investment bank's sale forces suggest that the trading ideas to institutional and high net worth investors and trading desks usually help the clients price and execute trades a structure that fit for a individual specific need. So that's how why as to these investment banking divisions are and these investment management divisions are prorogating with the fact that they'll be directly inclined with those clients and investors to meet their needs. So now next comes into the picture, that is merchant banking. So merchant banking is a private equity activity of investment banks basically. Sometimes merchant banking is a part of alternative management investment division as well, guys. So that is also divided into two parts. So one is research, another one is strategy. So guys, research is basically a division which reviews the companies and writes reports about their prospects, often with buy or sell ratings. So they basically write the reviews regarding the companies, they write their reports about their prospects with the buy or sell ratings, whether they should go for buying or selling or another way around. While the research team generates no revenue, its resources are used to assist traders in trading, the sales forces in suggesting the ideas to customers, and investment bankers by covering their clients. So, though research is not generating any kind of revenue, but it is an imperative kind of a phase which has to be taken care of, because without research, you won't be able to generate any kind of revenue. So, that is also a thing. And the next part comes into the picture, that is strategy. So, guys, strategy is basically a division which advises external as well as the internal clients on the strategies that can be adopted in order to extract better returns in various markets, ranging from derivatives to specific industries. Strategists basically place the companies and industries in a quantitative framework with full consideration of the macroeconomic scene. So basically, strategy is a division which allows and advise the external as well as the internal clients on the strategies they can adopt in various kinds of market. So that's how merchant banking goes with two dimensions. One is research, another one is strategy. So guys, overall front office is divided into three parts: investment banking, investment management, merchant banking. In case of division, that is again divided into two parts. One is industry coverage groups, another one is product coverage groups. In case of investment management division, it is again divided into two parts, that is private wealth management and private client services. Again, in case of merchant banking, the same is being divided into two parts, that is research and strategy. Merchant banking is a private equity activity of investment banks. So what's what they do? Now comes our role. So what kind of good things we'll be able to extract as CAs if we enter into an investment bank? So that's middle office, the risk management and the compliance areas. So guys, risk management basically involves analyzing the market and credit risk that the traders are taking onto the balance sheet in conducting their daily trades and setting those limits on the account of capital that they are able to trade in order to prevent all those kind of bad trades having a detrimental kind of effect to the desk overall. So risk management will take care of all these aspects of analyzing the market. One, analyzing the credit risk that is available with the traders who are taking on to the balance sheet in conducting their daily trades and transfers. Risk management allows setting up the limits of the amount of capital that they are able to trade in order to prevent any bad kind of trade which may have like a detrimental kind of effect, guys, to the investment management company overall. So they are the ones who take care of the risk management in such a case. Another key basically middle office role is to ensure that the above mentioned basically just told you regarding those management economic risks are being captured accurately as far as the agreement for commercial terms with the counterparty is being made correctly or not, and that too on effective time. So one has to take care of these calls as well, whether microeconomic risks are basically captured accurately on time or not, because there might be a chances that there is some risk going on in the macroeconomic situation, and somehow the company is not able to like be aware of that risk on time, and that may create some adverse risk effects for that company. Next comes into the picture, that is compliance. So compliance are those areas which are responsible for the investment bank's daily operation compliance to meet the external and internal regulations. So like if a company has to pay like some credit amount to some of the suppliers, and they are having already the credit balance in the balance sheet. So it is the prerogative of these compliance areas to check out that whether the payment is being made on time or not, whether the statutory compliances which are being involved with SEBI or other government body institutions, whether they are paid on time or not. So these are the persons who take the day in daily operations relating to the compliance of meeting the external and internal kind of regulations. So that's the kind of work a middle office work do. So now let's hop on to the last and the back office kind of structure which is available in a investment bank. So guys, back office involves three categories again, and that is operations, finance, and technology. So operations is the one which involves data checking trades that have been conducted, ensuring that they are not erroneous and transacting the required transfer is being made on time. It is, however, a critical part of the bank that involves managing the financial information of the bank and ensures that the efficient capital markets through financial reporting functions are being made well on time. So that's how operations goes on. As far as the finance is concerned, finance areas are responsible for the investment bank's capital management and risk monitoring. By tracking and analyzing the capital flows of the firm, the finance division is the principal advisor to senior management on essential areas, maybe such as controlling the firm's global risk exposure, or we can say the profitability, or we can say the structure of the firm's various businesses. So that's how and what is finance areas are responsible for. So they are the persons who are taking on the investment management, banks, capital management and risk monitoring. They are the ones who are taking their in. And what about the technology? So technology refers to the IT department. Every major investment bank has considerable amount of in-house softwares. So like Edelweiss, if I'm talking about like Goldman Sachs, so Goldman Sachs will be having their inherent updated internal software with which they are usually performing the regular operational deals, and they are the softwares in which where they are actually maintaining the data. So it refers to that like every major company investment banks has considerable amount of these in-house softwares which are actually created by these technology team. So who are also responsible for computer as well as the technology and telecommunication based support. So technology does provide very imperative kind of stuff to the entire investment banks. So certainly if I have seen during my work exposure with one of the big four as well, that if the technology department is not working someday, let's suppose, then extreme revenue loss and extreme chaos is being made during the entire day. I've actually seen and witnessed that kind of situation as well in my office. So I can easily say that in case of technology relating to investment banks, that's of vital importance, that's of enormous kind of importance in their lives. So back office has been bench strength for these kind of all regular front office and middle offices. So that was all about front office, middle office, and back office, guys. I guess you got the complete clarity as to like how investment bank actually works in which layers. I'm sure, maybe certainly tomorrow or day after tomorrow, definitely you guys will be planning to have that kind of extreme exposures, that nerve wrenching and the kind of. If I'll be talking about an example, so let's have the picture of like Hrithik Roshan playing the role of like in Zindagi Na Milegi Dobara. He did perform as an investment banker, broker, commission broker over there. So that's the kind of work, high pressure work that they do. But instead, they are actually able to earn good amount of returns on their commissions over there as well. So it's a high paying job, plus it's a high tough taking challenges kind of a job. So if you are ready for it, it's your time to ensure that yes, you do it very well. Perfect, guys. We just move to our next topic, and that is functions and roles of investment banks. So what's the kind of functions and what's the kind of roles does an investment bank plays? So simply, investment bankers provide variety of services to its clientele. Major functions are arranging the private placements of equity shares for corporates. Next comes selling of public securities for companies. That has already been discussed. We'll be discussing about private placement in our next slides. Arranging an equity IPO for the corporates. That has already been covered in my last slide. How do they do it? Apart from that, they also arrange a debt issue for corporate clients. Maybe if a company has like thought about issuing a debt issue rather than going for capital. So That is also something which an investment bank does help in. Apart from that, they also provide the regular advisory services to corporates and high net worth individuals on wide gamut of issues. So that's the broad range of role and functions that an investment bank plays. So now let's move to our next topic, and that is, in a private placement, stock is sold directly to one or a small group of investors rather than being distributed to the public at large. Let's suppose Reliance Capital Limited tomorrow goes for an option that they want actually to have the issue of capital, and they require some funds. So they have many of the options. They can go for debt issue, they can go for equity capital, they can go for preference share capital, they can go for bonds as well. However, let's suppose they have like equity share capital in their mind, but they want to have that kind of funds only with the help of Tata, let's suppose. So they will be simply having this kind of private placement services wherein they'll be selling those stocks directly to Tata's company, and Tata will be purchasing those issue share capital, and in return they'll be helping them in raising of the funds by providing them the required funds. So in that way, it will have like direct kind of placement. So this direct kind of placement of equity share capital is known as private placement, wherein the stock is directly sold only to one or a small group of investors rather than distributing to common public or majority shareholders at large. So that's how it actually works. And a private placement does provide you an advantage, and that is the lower flotation cost. So guys, there is no requirement of making those high range of prospectors, having these kind of like regular expenses of trustee or custodian or that kind of fees as well. So you can simply go for an advantage, that is, you'll be able to extract some good returns with a lower flotation cost. However, since the stock would be ought to be bought by a small number of outside, so it would not be actively traded. So guys, that is actually a problem, because private placement, because it's being made just for the sake of small number of outsiders or small number of investors, so that will not allow you to go for an option of actively trading those securities, which would have been available in case you would have decided to go for a direct equity share capital with a large number of stakeholders and shareholders for that matter. So here that wouldn't be actively traded, and a liquid market would surely not exist. Further, since it would not have gone like through regulators' stringent norms, the holders would unavailable and unable to sell it across except to a restricted set of sophisticated investors. And further, it may be difficult to find investors willing to invest large sums in the company and yet to be minority shareholders. Maybe let's suppose tomorrow Tata don't feel it that okay, it's not a good kind of investment where I should block my funds in. So there might be a chance that since it's just meant for a small number of shareholders or small number of investors, the person may not find it very much feasible or suitable for its domain to fit in and somehow provide the required and stipulated and specified fund capital to the other person. So there are chances that it might be difficult for finding the investors willing to invest the large sums of the company and yet to be a minority shareholders. So that's advantage. So what's the advantages? There are first the lower flotation cost. And what is the disadvantage? I've just briefed you up. That will be these stocks are not actively traded because they are meant for only private placements, and there will be non-existence of the liquid market because you are only directly targeting only to private placements. Plus, it will be difficult to find the investors who are willing to invest such large sums in the company. So here's the advantages and disadvantages relating to private placements. So next comes into the picture, in place of prospectus, what actually is required to be done in a private placement. So investment banks usually draft a detailed private placement memorandum rather than prospectus, which divulges information which is similar to prospectus, only the name is changed, and that is the private placement memorandum. It's called PPM. And certainly, guys, believe that a private placement does not involve any kind of roadshow. So it has to be like a direct kind of meeting. So in case of prospectus, we do issue these kind of PPMs. And instead of a roadshow, the companies looking to sell private stock or debt will host the potential investors as interest arises and will give the presentations on dealing with the entire deal. So that's how it's going to happen. There won't be any kind of roadshow available, like wherein you have to issue such kind of prospectus and these kind of diverging details. So the role here for an investment banker is to attempt to find a buyer by writing the PPM and then contacting the potential strategic financial buyers of the client. The investment bankers functions as negotiators for the company, helping them to convince the investor of the value of the firm. And accordingly, the fees is being involved in private placement for an investment banker are the fixed percentage of the size of the transaction. That's how they are able to deal. I bankers are the persons who act as the negotiators for the company. So that's the key role which I bankers play. So that's how private placement is being done. Recently, there have been like talks about and news relating to private placements that are available in Indian markets. So I'll be sharing with you so that you will get an entire idea whether it's actually just a theoretical concept or no. There are some practical, and believe me, guys, it's not at all a theoretical concept. It's absolutely practical. I have just incorporated slide because I wanted to provide you a practical aspect and outlook on this private placement. So recently, Tata Motors is into a way of raising the finance through private placement basis. So the automobile company, private Tata Motors Limited, has actually received an approval for subscription on a private placement basis, up to 5,000 rated listed unsecured debentures. So that's a news which has just been delivered 3 days back. Along with that, there is Ultratech Cement, who is actually focusing upon raising 300 crores via private placement. So www.indiainfloline has already circulated this news amongst the IFFL group. That's a leading financial services player and a diversified NBFC. There is JK Lakshmi Cement, who is also planning to raise rupees 500 crores. So guys, that is the latest private placement news which is available in the Indian markets. It's completely practical kind of concept which is going on in the market. So nothing, no such thing is provided in SFM subject which will deal only primarily with theoretical knowledge. So each and everything and each and every topic which I am discussing with you in my past slides as well as in this presentation, all these concepts are practical enough, and definitely there is so much work going on these topics. They are not just mere theoretical based topics. Indeed, companies are working on these kind of segments in order to save their flotation costs. So now let's come to the next topic, hot topic of the day, that is investment initial public offer issue, IPOs. So iBanks underwrite the stock offerings just as they do bond offerings. They'll be able to provide the bond issue as well as in a similar state. They'll be offering the equity share capital issue. So in the stock offering process, companies sell a portion of their equity of itself to the investing public. So I'll be simply quoting it as, okay, you have the share capital and you want money. You provide the issue of those share capital and I'll be able to provide you the finance. So that's how the IPO simply works. Companies sell a portion of their equity to the investing public. So guys, in that case, IPO, initial public offer, is the process of first time issue of equity in the company makes, that a company makes. That's the first time process of getting the issue of its securities listed on the stock exchange. That's how IPO helps. Through the IPO process, the stock in a company is created and sold to public. After the deal, the stocks listed on stock exchange, and certainly in that case, the equity underwriting process is just another major way in which the investment banking differs from commercial banking. So equity underwriting is the process that enables an investment banking to differ from what just a commercial banking stands for. So IPO is the process of first time issue of equity a company makes. Through the IPO process, the stock in a company is created and sold to public. After the deal, the stock listed on stock exchange. The equity underwriting process is another major way in which investment banking differs from commercial banking. So guys, basically if we be considering this entire process of IPO from an investment banking perspective, we'll get to know that the IPO process consists of three major phases. First, hiring the managers. Second, due diligence. And third, marketing. Our next slide will be on this topic only. So what are those? First, let's discuss about some practical knowledge which will be garnered around what's those recent IPO issues which are available in India. So recently PNB Housing Finance has fixed up to release their IPOs, and that is going to hit the primary markets on 25th of October 2016. The price band for the same has been fixed at rupees 750 to rupees 775 per equity share with a face value of rupees 10 each. The issue size is approximately going for 3000 crores. So the entire details regarding these IPO is being published on moneycontrol.com as well as NSE, or you can go for chittorgarh.com as well. So you'll be able to extract the information about this IPO, which is soon going to release on 25th of October. So PNB Housing Finance is a subsidiary of Punjab National Bank, offering housing loans to the individuals and corporate bodies for construction, purchase, repair, or renovation, as well as loans for the commercial space, purchase of residential plots, loans against property. So if we'll be considered my view, I would say that okay, this issue is a bit overpriced, and what I feel it should have been like priced below 600, something around 600 would have been good. But since this IPO is already overpriced at a price of rupees 750 to 775, the kind of gains which a person usually expect, like investing in an IPO, won't be able to extract those kind of returns while investing in this, because I guess this is like already overpriced, and certainly even after the issue of IPO, the price won't fluctuate much and may rather go for around 750 to 800 only, or maybe 850 for that matter. But the kind of gains which a person usually expects while investing in IPO, I don't think so that will be able to extract those kind of returns in this IPO issue. So you may like ignore it for that matter while investing, but certainly this has to be incorporated in my slide because I wanted to provide you the practical kind of knowledge and the practical market scenarios which are going on in India. So that's the IPO which is soon going to release on 25th of October. So I was talking about the phases of IPO process. So what are those three phases of IPO process? So first, they'll have to hire the managers. Second, case comes for due diligence and drafting. And finally, they'll have to market that IPO. So we'll be discussing about all these three essential steps one by one. So the first step for a company wishing to go public is to hire the managers for its offering. The process, which is often termed as a beauty contest, somehow we can say that. They'll be hiring those managers on the kind of their skill set, their offerings which they'll be able to provide. And typically, this process involves meeting with and interviewing those investment bankers from different firms, discussing the firm's reason of going public, and ultimately nailing down a valuation. It is here high bankers unleash their expertise and convince a company how much stock and what rate it can relatively and realistically sell. Perhaps, understandably, the company often choose the bank that provides the highest valuation during this kind of beauty contest phase instead of the best qualified manager. That's a sad part because somehow each and every company is more focusing upon the valuation. So whichever company is providing you a valuation, okay, your stock will be able to trade at a price of like 750, and definitely it will go with that kind of investment banker firm because it is already quoting it like something high, and they'll be able to extract those returns on the basis of that 750 rather than going for 650 because there they'll be getting a loss of 100 rupees. So suddenly they'll go with higher valuation kind of investment banking firm, merely choosing the most qualified manager. Almost all IPO candidates select two or more investment banks to manage the IPO process. Just don't get dissatisfied with the fact or maybe someday shocked that okay, why PNB Housing is already having like two or three. Yes, indeed, they have already appointed Morgan Stanley, they have already appointed JP Morgan Chase, apart from Kotak as an Indian individual that is going to help out in the IPO process. So there might be chances, but the companies usually prefer more than two or more IPO managers will be able to take care of the entire IPO process, those investment banks. Next comes into the picture due diligence and drafting. So the second phase of this process involves understanding the company's business as well as the possible scenarios, and then filing the legal documents as required by the stock exchanges, lawyers, accountants, iBankers, and of course the company's management. They ensure that filing should have been done in a timely manner. There comes the due diligence and drafting part. And finally, after the completion of hiring the managers and due diligence and drafting, comes into the picture marketing. So the third phase of an IPO is the marketing phase. Once the approval comes on the prospectus, the company embarks on a roadshow to sell the deal. A roadshow involves flying the company's management to coast, visiting the institutional investors who are potentially interested in buying the shares in the offering. Typical roadshow lasts from 2 to 3 weeks offering and involve meeting literally like hundreds of investors who first listen to the company's presentation and then ask scrutinizing questions. So the marketing phase ends abruptly with the placement of the stock, which results in a new security trading in the market. So guys, that's how the complete phases of IPO process goes on. It starts with the hiring of the manager. That is actually called the beauty pageant, the beauty contest, where the best one is selected on the basis of like the best valuation that one offers. The same goes again for the due diligence and drafting part, and lastly, the marketing part is being done. So that is how phases of IPO process goes on. Now we'll just discuss the last topic of this presentation, and that is employee stock option scheme and employee stock purchase scheme. So these are basically the two schemes which are available in the market. We'll discuss about two. So guys, first of all, employee stock option scheme means a scheme which is under which the company grants options to its employees, whereas in case of ESPS, employee stock purchase scheme means a scheme under which the company offers shares to its employees as a part of public issue. That's the basic difference between the two. One in with ESOS, the company grants the options to the employees. In ESPS, the company offers shares to employees as a part of public issue. And in case of employee stock option, the auditor's certificate is required to be placed in each AGM, annual general meeting, stating that the scheme has been implemented as per the guidelines and in accordance with the special resolution passed. Whereas in case of employee stock purchase, no such certificate of auditor is required. In case of employee stock option scheme, it is actually not transferable. But in case of employee stock purchase scheme, it is transferable, but after a lock-in period. One can transfer these kind of purchases after lock-in period. That may be from 6 months, 1 year, or 2 years for that matter. But in case of ESOS, those stock options cannot be transferred. Whereas, okay, so next it comes on the fourth point, and that is the amount payable may be forfeited if the options are not vested during the non-fulfillment of the condition relating to the vesting of the option. Then the amount may be refunded to the employees. But in employee stock purchase option scheme, that thing is actually not applicable. And the last, minimum period of 1 year shall be there in between the grant and the vesting period options. The company is actually free to specify the lock-in period for the shares issued pursuant to exercise of option. So that's with the ESOS. Whereas in case of employee stock purchase scheme, 1 year from the date allotment, if the ESPS is part of public issue, the shares are issued to employees at the same price as in case of public issue. The shares issued to the employees pursuant to ESPS shall not be subject to any kind of lock-in. So guys, that was all about this presentation. I'll be concluding my presentation with a dose of motivation. That is about your life. So guys, your life is just like a game board. So where time is your opponent. And if you procrastinate, in such a case, you will certainly bound to lose the game. You must make a move in order to be victorious. So Napoleon Hill is a very eminent kind of author. We have his book Think and Grow Rich, which has been written by him. So that is available in the market. So he has mentioned that quote, and it's very well said. Yeah, our time is very much limited, and certainly we have to perform so many things in our life. So many actions need to be taken. So for that, you just have to come out of your comfort zone and achieve the greatest of the possibilities that are lying for you guys. I'll be saying a thank you on behalf of the Edupedia world. Keep interacting, guys, via queries, questions in our comment boxes. That will help us in understanding your needs better, and certainly that will help us in staying connected. Love you guys. Bye. Take care. All the best.